Good morning, everyone. I hope you're all doing well. Can you just let me know in the chat function if you can hear me and if you can see the screen that I've shared just before we start? Okay, so in today's session, what I thought we're going to focus on, instead of moving on to closed corporations, I think we're just going to take a step back and just focus on the test and the assignment, because I could see there's a number of things you guys were struggling with, and we need to address it while it's still fresh in your minds, because they will ask it in the exam. So I don't want you guys to lose unnecessary marks. So I thought instead of starting with something new, let's rather just focus on what we've done so far and then just give you some feedback and go through the questions so that if you have anything that you're wondering about, then we can discuss it. Okay, so based on the test, it did not go as well as we hoped. A lot of students actually struggled. So the average for the test was 49%, which is okay. I know a lot of you are aiming for 50. The top mark was 82%. And why did students actually do so badly? It's because they struggled with basic concepts. So when we look at the first question, which is depreciation, students got confused with the two methods of depreciation, or they did not apportion it. Alternatively, they did not show me the calculations, so I couldn't actually give them marks if they've made a mistake, or they didn't actually read what was asked in their question. So they did the workings but never answered the question. For question 2, which was your disclosure, I could see a lot of students didn't know the disclosure at all. And with that one specifically, if you didn't show any workings, I could not give you any marks at all. And then the last question was where you had to do the journal entries. Now, a lot of students got confused between what's a journal, what's a trial balance. If you gave a trial balance, we did not mark it. We tried to help you guys by looking at your workings, but as I said, a lot of students didn't actually show any workings, so we weren't allowed to mark anything. And then I could also see a lot of students did not finish the test, so they ran out of time. So the main things where students struggled was question 1, they didn't calculate it according to the year. So they worked out the depreciation, they knew exactly how to do the calculation, but they didn't do it per year. So then when they got to the total depreciation at the end of the year, they took in portions of accumulated depreciation as well, or they didn't actually answer the question by giving the current year's depreciation. So they gave me the total accumulated depreciation as opposed to depreciation. For the PPE note disclosure, like I said, most students didn't even know how to do the disclosures. No calculations were provided, so we couldn't give method marks. And then a lot of students, even though they knew the asset were disposed of, still indicated a cost and accumulated depreciation amount for the carrying amount at the end of the year, where it should have actually been 0. So if you've only got one asset, you get rid of it. There shouldn't be any amounts at that specific location, but I'll show you again when we get there. And then question 3, most students gave a trial balance instead of general journal. So that means a first semester concept, people got confused between the two. Now, because we haven't really done a trial balance as such, we focused more on the general journals. And the fact that they told you no narrations are required, they were actually leading you to what you're supposed to be doing, and most students missed that. And then the calculations was an issue, and then students got some of the accounts correct, but then they swapped the debits and the credits wrong. So they did the entry the incorrect way around, or they gave incorrect account names. So students also knew they had to do journals, but instead of giving me the account name, they would have, for example, called it adjustment. Or they would have said owner's equity or assets. So they got a bit confused between trial balance, your accounting equation, and your general journals. So I'm just going to stop sharing this, and then I'm going to share the question which we're going to go through. I will also load this for you guys online. Okay, can you guys see the PDF on your screen? So I'm going to go through the PDF and then I'll share the Excel file. It doesn't work if I want to share all of them if I've only got one screen. Okay, so if we go through your question and what they've asked you, the first thing you had to do is you had to look at what was required of you. So you will see question 1.1, they actually asked you to calculate the total depreciation expense. Now, when they talk about the total depreciation expense, it is the expense for the current year. Now, the current year runs from 1 April 2019 up to 31st of March 2020. So that is the period's depreciation you need to work out. Okay, now a lot of students did not do that calculation. They did the calculations for all the years. So if you did the calculations, I would have given you marks for the calculations, but you would have lost the marks for the answer ultimately because a lot of students added the incorrect things together. Then question 2, they asked you for the carrying value of an asset. Now remember, when we ask for carrying value, it is the cost less accumulated depreciation. So that means depreciation for all the years. Now, some students only deducted 1 year's depreciation as opposed to all of them, or they did the calculation incorrectly. So then they took the cost, divided it by the number of years, and then multiplied it with percentages to work out the carrying value. So remember, carrying value is your cost less accumulated depreciation. So let's quickly see what information they provided to you. So they gave you a table with 3 assets in it. Now, what you could see is the dates purchased. There were different dates, and some of them were actually purchased during the year. Now, if you look here, 1 of them were purchased during the year, and then 2 of them were already purchased in the prior period. So that means for the current year's depreciation, you would not have to apportion it. But when we get to part 2, where we had to work out the carrying value, you would have to apportion that for them. Denise, yes, I'll put these slides for you on VC Learn as well as the Excel, because it's important that you guys know those things and can work through it, but I just want to discuss it before then. Okay, so then the second column, you see there's a cost price of the asset. Now you will see some of the items are exclusive of VAT, some of them are inclusive of VAT. Now, as soon as you see something is inclusive of VAT, you need to remove the VAT component. Now, what a lot of students did is they realized they need to remove the VAT, but they removed the VAT for all the items as opposed to just the one where VAT was inclusive. So when there is more than one item, you only take out the VAT for the one that has VAT included in it. Okay, then the second last column is the depreciation rate. Now, what was in there is you could see that some of them were percentages, the first 2, and then the last one was the useful lives. Now, when we give you useful life, instead of multiplying it like we do the percentage, you divide it by the number of years, or if you want a percentage, then you put it 1/6 to work out a percentage, and then you do it the same as the first 2 methods. Now, a lot of students got confused with that and they multiplied it with 6 as opposed to dividing it by 6. And then the different methods, remember, straight line is on cost, whereas diminishing balance is on the carrying amount. Now, some students still worked out the diminishing balance on the cost price and then did straight line on the diminishing balance. Then just below that, they told you there were no other assets in the asset register other than the above. Now, because of the fact that we have 3 different types of assets, there were no additions that you had to take into account when working out the depreciation. The only tricks in here was some of them were apportioned during the year and the VAT inclusive, and then just this different depreciation methods. Okay, so I'm going to share the Excel file with you guys, so that we can look at how are you supposed to calculate this. Okay, so what I did is on the Excel, I literally took the table as it was in the question, and I've just done different colors so that we can focus on each and every component separately. Okay, so this is also what you had to do in the test when you did the calculations, is I had to deal with each and every asset on its own. So for the first asset, they said the Toyota Hilux was bought in December, and our year end is end of March. So that means we had it for December, January, February, March. We had it for 4 months. So for that year, we would take the 200,000, we would multiply it with the 25%, but then we would only apportion it for the 4 months that we physically used it. So for that calculation, you had to get an amount of 16,000, and you calculate it as follows: the 200,000 times the 25% times the 4/12. So a lot of students knew they had to multiply it with 25%, and a lot of students also got the 4/12. Some students thought it was 5/12 or 3/12. They miscalculated the number of months. And then some students also took out the VAT component, which they shouldn't have. Now, because it's the first year we are using this vehicle as well, the accumulated depreciation is going to be exactly the same as the current year's depreciation. So when we work out the carrying amount, we're going to take the 200,000 and we're going to deduct only the current year's portion of depreciation to work out the carrying amount for the vehicle, which is part of question 1.2. Okay, so that is how you would work out the depreciation just for the motor vehicle and how you would work out its carrying amount. Then the second one was the computer equipment. Now the computer equipment we already purchased in the prior year. Now we purchased it in the 1st of July in the prior year, so that would have mean in the previous year we would have had July, August, September, October, November, December, January, February, March. We would have used it for 9 months in the previous year, and then we would use it for the full 12 months in the current year. But in this one, you would see it was inclusive of VAT, so I would have to exclude the VAT. Now, because it's the diminishing balance method, you would have to go work out what is the carrying amount at the beginning of the year, which means I need to work out the depreciation in the prior year as well to work out the value. So like I said, the first year we only used it for 9 months, but we have to remove the VAT. So you take the 92,000, you multiply it with 100 over 115, or you could divide it by 1.15. Then you multiply it with the 20%, which is our depreciation rate, and then we apportion it again for only the period we've used it for, which is the 9 months, to get to a value of 12,000. Now, because that was also the first year, your accumulated depreciation would also be 12,000, and that means your carrying amount is now going to be the 92,000 excluding VAT, which gives you 80,000, less the 12,000 means our carrying amount at year 1 would be 68,000. Now, if we move on to year 2, we work out the depreciation using this carrying amount. So you use the 80,000 next to 12,000, or the 86,000, multiply with 20%, and it's for 12 months, gives you an amount of 13,600. Now, what a lot of students did is they just swapped these around. So they knew they had to multiply it with 20%, but they worked out the amount for the periods incorrectly, which means their current year's depreciation was incorrect. Now, then for the accumulated depreciation, we add the 12,000 from the prior year plus the 13,600, gives us a 25,600, and then to work out the carrying amount, we take the 80,000 in the beginning, and we deduct the 12,000 as well as the 13,600 to get to the 54,400. Tumelo, okay, so the cost price, we are using the cost price, but we are using the cost price excluding the VAT. Okay, but why we are using the carrying amount for the depreciation calculation is if we just scroll back to the top, let me quickly show you the table. You would see that that one's depreciation method is based on the diminishing balance method, and the diminishing balance method is basically depreciation on your carrying amount. Okay, so that's why we are using the carrying amount as opposed to the cost when calculating the depreciation. Does that answer your question, Tumelo? Okay, so that is how you would have to work out computer equipment number 2. So with this question, where a lot of students went wrong was specifically with the VAT and missing that it is diminishing balance method, which we use the carrying amount for. Then the last one was machinery. Now that was already purchased in 2017, and that was at the end of April. Our year end is the end of March, so that means for the first year we've used it for 11 months and then we've used it for 2 full years. Now in this case the depreciation rate is 6 years for the useful life. Now how we calculate this one, how it differs is you take the cost divided by the useful life and then the number of months divided by 12. Okay. Yeah, let me just change this because someone's going to get this wrong. Carrying amount. Okay, so we take the cost. Now in this scenario, the cost was 150,000 excluding VAT. So we take the 150,000, we divide it by the 6 years, and then we multiply it with 11 over 12. So instead of multiplying it as we did with the percentage, here you divide it by the number of years. So then you get an amount of 22,917, which would be the same for the first year. And then your carrying amount would be the 150,000 less the 22,000. Then we would do the same calculation, but now because it would be for a full year, for year 2 and 3, we just take the 150,000, divide by 6, multiply with 12 to give us 25,000 per year. We do the same method for your accumulated depreciation. We just add it to the prior year's accumulated depreciation, our current depreciation for that year, and then we work out our carrying amount. So the carrying amount for that one was 77,000 and 83,000. So for question 2.1, your answers would have been the 77,083, your 54,400, and your 183,333. Now for that question, most students actually did not perform too badly because we gave you method marks based on question 1.1's calculations. Now the thing with question 1.1 that most students missed is this last step, because they asked you for the total depreciation. You have to go add up the current year depreciation for each and every asset to work out the total depreciation for the year. But you will see it's only the depreciation for the period 1 April 2019 to 31st of March, which is our current year. And that was the last step, which a lot of students actually missed. Okay, before we move on to question 2, are you guys happy with question 1? Do you understand how to do that?